India's largest public sector bank, State Bank of India. Arundhati Bhattacharya is joining in live on the show, and my colleague Ritu Singh is here to take us through that interview. Ritu, take it away.
Well, thank you so much, Kritika. We are, of course, joined by Arundhati Bhattacharya, the chairperson of State Bank of India. Mrs. Bhattacharya, thank you very much for joining us on our 17th birthday. It also happens to be the day of the 5th bi-monthly monetary policy. If I could just ask you, what are your first thoughts from what you've heard from Governor Patel just a few hours back, not cutting the interest rates, lowering the growth forecast figure, maintaining CPI inflation at 5%, rolling back that CRR for that matter. What is your biggest takeaway?
Well, first and foremost, let me wish all of you a very happy birthday and many, many happy returns of the day, and so also to your viewers. Going to the RBI monetary policy, it was a bit of a non-event. I think most of us had thought that 25 basis points was given, and many of us, including me, we were rooting for an even higher number. So the fact that there was no change was definitely a little bit of a disappointment. But I suppose, what was on their minds could probably have been two or three things. The governor talked about inflation. So probably what he could have in mind is the fact that oil prices look to be going up. Secondly, certain commodity prices have also stabilized. Though frankly, if you look at the numbers and internally what we have looked at it, it does not appear that inflation is showing any upward kind of a bias. Secondly, probably he may have had the exchange rate in mind, given the fact that a Fed rate hike is almost certain, though he did say that the Fed rate hike has already been factored in. But that could have played somewhat, had some weightage when this decision was taken by the MPC. But other than that, I think, one thing that is definitely apparent to all of us is the fact that in the near past there has been massive demand destruction, and it is important at this point of time to get demand back up, and for that the economy does need priming up. And that is one thing. I think the rate cut, it may not have meant anything really material immediately, in the sense that, as you know, banks are really not dependent too much on market borrowings, other than the yield, fall of yield. So other than that, it may not have had any impact, but it would definitely have had a very good impact on sentiment. So to that extent, I think the market is a little disappointed. But I hope, given the fact that liquidity is very ample, that we will still see a downward bias on rates and that the yields will drop.
Thank you, Mrs. Bhattacharya. In fact, over to Shireen Ban now. She'd also joining us now in the studio.
Right, thanks. Thanks very much, Ritu, and thanks very much, Ms. Bhattacharya, for joining us on an important day for all of us here at CNBC TV 18. As you pointed out, that the street is disappointed because the expectation was that 25 was given, if not more than 25, and some were even hoping for a 50 basis point cut. But let me ask you about the decision on the CRR, ma'am, because when the notification had come in from the Reserve Bank, I remember you had joined us on the channel and you'd said that you would need to think 100 times now before transmission. But given the fact that the Reserve Bank has very clearly said that the incremental CRR of 100% will stand withdrawn starting the 10th of December now, what can we truly expect as far as transmission is concerned, and does this now ease some of the concerns that you had?
Yes, it does definitely address some of the concerns. We are very relieved that this additional burden that had come on to us, that has been taken away. I wish something could be done for the fortnight past when that burden continued, but I don't think we've got any relief from that. But at least going forward, we are very glad that this burden has been reduced. And as I said, the ample liquidity is something that's going to drive rates down. So to that extent, once this burden is taken away, we will definitely be seeing some kind of lowering of rates going forward.
What could that lowering of rates amount to, Ms. Bhattacharya? And also, if you could give us some sense of, you were talking about compensating banks for that fortnight. What could be the implications as far as the bank itself, your bank itself, is concerned? Because we haven't seen the Reserve Bank provide any relief, at least prior to the 10th of this month.
As I said, there has not been anything from the Reserve Bank regarding that period. I don't really know whether they would consider anything or not. For instance, paying interest on CRR, they have repeatedly told us it's not something that can be done, and it is not allowed by an act of Parliament. But Parliament is also something that can be approached for that particular period and for this particular amount of CRR also, if the central bank wishes to give us something for it. I don't really know whether they would, but this is something that could definitely be considered, given the fact that the banks have really played a yeoman's job in getting this entire demonetization exercise through. There has been a lot of expenses that we've had to incur. So to that extent, probably a little relaxed view on this would be something that the banking sector would immensely appreciate. Having said that, as I said again, at this point of time, this is not permitted by law, so I don't really know whether this can happen. But going forward, at least the fact that they have taken this burden off, and that is something that is really well appreciated.
Ms. Bhattacharya, if I could ask you as far as growth itself is concerned, because I heard you talk about demand destruction. The Reserve Bank, on its part, has lowered its FY17 GVA growth projection from 7.6% to 7.1%. But you've now had some sense of the impact of demonetization on the ground. What would your own estimate be in terms of growth? And what do you make of the RBI number?
See, internal research indicates that there wouldn't be a huge fall in GDP. But if you look at opinions across the board, people are expecting a fall between 1 to 2%. At this point, for me, really, I haven't made up my mind, because as I said, these days are very different days. They are not normal days. And as the cash supply gets restored into the economy, we may see a very quick rebound of demand. Having said that, this is something on which opinions are divided. Even internally, opinions are divided as to when that rebound will happen, whether it will happen within a quarter, 2 quarters, or maybe a little more. I would like to think that it will happen quickly enough. But again, this is a question that it's a situation none of us have ever seen before. So very difficult to make any proper predictions as to when it will happen.
But if I could ask you what the situation is as far as cash supply itself is concerned, because there were pointed questions repeatedly asked to the governor as well as the deputy governors in terms of cash supply. And, while obviously the Reserve Bank will say that printing is at full capacity and all efforts are being made to provide cash, and at this point in time, 19 billion notes have been put back in the system, 19 billion pieces have been put back in the system is what Deputy Governor Gandhi had to say. What is the situation on the ground? Because lines continue outside of ATMs. We are given to understand that just about 30% of ATMs are being loaded daily with cash. It's not just an urban problem. Rural India continues to face the brunt as well. What is the cash supply situation? And I would imagine that the banking infrastructure is facing the brunt of it, is it not?
Well, there are 2 things that I would like to mention here. First and foremost is that we are getting cash on a daily basis, and at least where our ATMs are concerned, most of them are running full tilt through the day. The second thing that I want to say, basically, it is not that people have not got cash, but there is a scarcity syndrome, and this scarcity syndrome leads to hoarding, tendencies to hoard. So people who don't normally keep cash at home, even they are actually drawing 24,000 per day, or rather per week, and keeping it at home and not really circulating it. The other problem that is arising is that today we have mainly 2000s and 100. Now, to handle 2000 and give change, say you spend something like 600 rupees, you have to be given change of 1400 rupees. Now, counting out 14 notes is a very difficult proposition. Normal people make mistakes if they have to count notes beyond 6. So 5 or 6 notes counting is very easy. Counting 14 notes is not easy. As a result, what happens is people neither buy nor do they want to use those 2000 rupee notes. Similarly, with 100 notes, people have a tendency to hoard them just in case there is a requirement and they don't have small change. Now, what will change this entire equation is the entry of the 500 rupee notes. Already 500 rupee notes have started coming to all our branches We have, in fact, most of the ATMs are now getting stocked with 500. Hopefully by next month, or sorry, by next week, we will have enough 500s to start giving them out at the bank counters as well. Once the 500 comes in, it will act as the span breaker between the 100 and the 2000. And until the span breaker comes in, it's going to be very difficult for people to spend either 2000 and 100. So I think, you know, what is really the point over here is how soon will the 500s be able to be produced in quantity enough for people to feel comfortable. And the second thing is for these limitations to go away. These are the two things that's going to restore normality. I think the first one, the 500 supply, will come first, and the second one later. But once these two things go, I think things will go back to normal pretty quickly.
Can you explain to us, Ms. Bhattacharya, what the situation is as far as deposits themselves are concerned today? There seemed to be confusion even on part of the Reserve Bank. I'm not sure whether this data that the Reserve Bank has presented is as of yesterday or is it as of the last count, which could perhaps be when the Reserve Bank last put out an official number, which was on the 27th of November. But what is the deposit figure as far as State Bank of India itself is concerned today?
See, the deposit figure would actually entail some amount of double counting, which is why we are not giving out deposit numbers. Frankly, deposit numbers have 2 or 3 elements. For instance, you know, the post offices and the urban cooperative banks also deposit at our counters into current accounts. So they get double counted if you're taking their number as well as taking ours. Similarly, the deposit numbers also has some amount of new notes coming in, which actually should not be considered in the deposit numbers. Therefore, I think, you know, it is better not to consider deposit numbers. They actually could be quite misleading.
You're saying they could be quite misleading, but explain to us, ma'am, because up until 2 weeks ago, we were getting an official deposit number from the Reserve Bank. Banks were also giving out a deposit number. Today we've had the governor first say, or the deputy governor first say close to 12 lakh crores, then 11.85 crores. Give us some sense, at least as the largest bank, irrespective of the double counting that you seem to be talking about, etc., what is the deposit number as of today?
No, as I said, you know, if I give you the deposit number, it's not going to make much sense. For us, it would be in the range of 3.5 lakh crores. But, you know, whether that is a proper number from which you can extrapolate the industry number, I don't think you will come up with quite the right number there. And therefore, I think it is important to go with the number that RBI is giving, because they have a proper count of the SBNs in the system rather than deposit numbers.
Okay. Ms. Bhattacharya, you were talking about the impact on the ground, and you hope that once we get past the hurdle of supplying 500 rupee notes into the system, as well as some of the constraints that have been imposed by the Reserve Bank being withdrawn, things will gradually come back to normalcy. But in terms of credit offtake, ma'am, if I could ask you that, what are the implications that you see as of today?
Well, in respect of credit, what we have seen during this period is quite a bit of repayment, not necessarily in the stressed accounts, but also in many regular accounts. So people, instead of just depositing money in current account or in savings bank, they have deposited in their loan accounts. And obviously it makes sense, because in current account or in savings bank, you get very low interest. Whereas if you repay 3 or 4 EMIs upfront, you are actually benefiting much more. So people who had cash on hand have actually gone ahead and repaid quite a bit of their loans. And as a result of this, in any case, you know, there is a shrinkage of the top line. Also during this period, you know, our focus has not been on marketing of loans as it normally is. And that also has resulted in lower offtake. So people were more involved in the demonetization process, not only us, but even, you know, other companies and other institutions. So overall, you know, there has been a slowing down of loan growth. This will obviously take a little time for it to go back to the normal levels. Also, I think, there has to be a little recalibration of things like prices, etc., especially if you're looking at real estate and areas like that, where there was sometimes, a component that was not coming through the regular banking channels. So these recalibrations are also taking place currently. And all of this is causing a drag on the system in the sense that the credit growth is not going up. And we need to give it a little more time before we can see some, good numbers coming in again.
You've now had since the 24th of October, ma'am, to get some sense of the implications as far as growth and also in a larger way for the economy. We heard from the Deputy Governor as far as the NPA situation is concerned as of today. But in your assessment, given the fact that we are expecting a demand destruction, given the fact that we are expecting things to continue to be slow over the next few weeks, if not the next few months, what could perhaps be the prognosis as far as NPAs are concerned?
Well, during this period, obviously, there have been some stresses. But on the other hand, in certain other institutions, we have seen, as I said, better cash flows as well. So people, wherever they had debts, they have actually been paying it up. And wherever they had receivables, they have actually, seen those getting liquidated. So it's not an uniform impact across the board. So different bodies have reacted differently to this particular exercise. So I cannot say that across the board there will be an impact on the workings of the small units and that there will be an increase in NPAs. In fact, in things like agricultural gold loans, etc., there has been mass scale repayments. So it's very difficult at this point of time for us to tell you exactly where the impact will be. However, let me tell you that while we may have been doing the demonetization, we have not taken our eyes off the ball. We have not allowed NPA situation to get worse. We have been working consistently towards resolution of these stressed units. We believe as the demand comes back, and this time hopefully the demand will be a sustainable demand, given the fact that there is money in the hands of rural Indians, that this sustainable demand will actually, enable the economy to grow faster. And therefore, in the slightly, medium term, the short to medium term, it will actually impact the NPA situation positively.
So you're saying that it will impact the NPA situation positively, so we may not necessarily see slippages go up?
Yes, that's right. We don't necessarily see slippages going up. That's quite right.
Okay. Ms. Bhattacharya, before I let you go, a final comment, ma'am, on the commentary that you heard from the Reserve Bank. And at least most experts that we've been listening into seem to suggest that the commentary has been on the hawkish side. Given the fact that we now have a Fed decision on the 13th of this month as well, there is domestic uncertainty, there is global uncertainty. Do you believe that there is room for rate cuts from here on?
Well, I think, if they are looking at domestic numbers, I believe there will be space. We have to look at two things. If RBI is looking at inflation, inflation will be driven mainly by demand. And if there is very little demand, then I doubt that inflation, will go up. So that being the case, I think there is definitely going to be space for RBI to consider a rate cut. Also, if it is really expected that the Fed rate is discounted in the market, then I don't think that will have too much of an impact on the other parameters in the country. I believe even today that there is definitely going to be space for a rate cut. RBI is a little hawkish in its tone because, a regulator is expected to be conservative. And yes, these are uncertain times. So to that extent, probably, they are hedging their bets in respect of these uncertainties. But from our estimation, we believe that there is going to be space for rates to come down.
Okay, you believe that there is space for rates to come down. As always, Ms. Bhattacharya, appreciate you joining us here on what is an important day for us, also an important day for the economy with the Reserve Bank's monetary policy. But thank you very much for joining us with your thoughts on the macro picture.